The amazing thing about life is that you choose what you allow into it. You choose how things affect you. You choose how you react. Happiness is a choice. Make that choice. Hello and welcome. This is Huskins, your Forex mentor. Welcome to your daily review of June the 17th and the preview of Tuesday, June the 18th. Your daily dose of events that shaped the Forex markets. Our results, we still hold an 88% win rate. I'd like to talk to you about few world events which are happening. We actually going through the G8 meeting right now, and there is an ambitious but delicate talk about transatlantic trade between two major giants, which is Europe and USA. Together, they make up more than 50% of the world's GDP, so it is actually very important. And of course, what happens through that can affect world currencies, can affect world markets, and can affect world outlook. So that's something to just keep in mind and keep it on the back burner, that there is something like this happening. Now, another thing which I'd like to share with you is that inflation in the Eurozone is still low. Why is this important? Because now you've seen that the markets are becoming more and more jittery, with the expectation of easy money being pulled out from the market. And when will easy monies begin to start getting out from the market is when we have inflation concerns. So once we see inflation numbers begin to be higher than normal, at that time the market's going to start getting worried, and they might turn jittery and sell off. The major stock markets might sell off considerably. So it's the inflation which needs to be looked at very importantly. Not only the inflation, but indications of the inflations in other numbers, such as in the PMI numbers, or just generally even the raw material inflation numbers. So that is where the market's going to draw its attention towards, and we'd be right on ahead of the curve. I'll let you know when, in case I feel that the inflation numbers will start to be high enough to cause jitters in the market. But right now the Eurozone inflation is still low, and the easy money which is going, there's no danger that that's going to change anytime in the very near future, at least in the Eurozone. Now I wanted to share with you, this is a very important chart. This is the US Consumer Sentiment Index. You look at how in 2007 2008 end, when the stock market was the lowest point, all right, the sentiment was right down out here. So why I've told you that I like to use this as a contra indicator. That means that when the sentiment is low, I give out trade plans to buy the market, and when this sentiment is sky high, I give out indications that it is too high for my comfort, and I want to sell the market, like the stock indexes, and perhaps even the carry trade currencies. So why I wanted to share this chart with you is that the sentiment is high. Yes, it is. It was lower than what it was last time, but we don't have it at insane amount of levels which it was at pre-2007. Now once we have something that high, I'll start beginning to get worried. So right now my outlook still stands on the stock markets. I expect them to go higher in the midterm, and once we have the consumer sentiment at close to 95, 90-95, I'll start getting worried, and at that time we'd be putting our guns to actually short the market, but like not right now. So that's about it. Let's actually look at what's on for tomorrow. Tomorrow we have two trades. We don't have any trades, but there are two major news indexes which I'll be looking at. We have the CPI from UK, as well as we have the ZEW, from Europe and Germany. So I'll be looking at that. We don't have a actionable trade plan on it right now, so we won't be trading it. That's about it, guys. Have a wonderful day. Bye for now.